I'm just going to talk briefly, guys, about one last opportunity, which is basically trying to reduce the tax that your children may pay in the future. Now, I appreciate that this may not necessarily be the first thing in your mind when you wake up in the morning, but I suppose the key thing to understand is that your children can only benefit from 335,000 euros as gifts or on your passing, on your demise, after, through your lifetime. And that can be swallowed up very, very quickly, as we know, because of the cost of property. And by the way, this is the property value in the future, 20, 30, 40 years from now. And that rate, the 335, is not index linked. It has been like that for several years, and it's fallen at the moment. The key thing is that you might say, well, okay, what benefit is that if I transfer a property? Well, there is a savings account that you can actually avail of, that you can put money into over a period of 8 years that can help you cover this. And I just want to give you a quick example of this. Let's say you've got one child and you have a house you live in worth 500,000 euros. You obviously want to pass that property on to your child. If you decide to do it, obviously, at the future, or if you buy another property and you give them the property, there will be a tax bill, which is 33% of the difference between the value of the house and 335,000. Very simply, that's 165,000 excess at 33%. That's about 55,000 euros. They will have to sell the property if there are no funds available in order to pay the tax. Seems very unfair, but that's the tax system in Ireland. However, if you've been in the position where you've been able to fund a savings plan, and the example I've used here is 6,000 a year over that 8-year period, with interest, that should very conservatively generate the 55,000 needed to pay the bill. It's a really useful savings vehicle. And all you have to do when you set up the savings plan is tick one box. And if your situation changes and you don't need to use this, let's say you decide to do something else, it just becomes an ordinary savings plan that you can use for future use. I really would encourage anyone who might have this problem to consider it.
Is it likely that the threshold will increase for what you can gift or pass on to your children?
The interesting thing is that this amount was actually north of 500,000, and it's subsequently been reduced. So not only has it not been indexed, so it hasn't gone up in line with the cost of living increases, but it actually has fallen. And it's likely that they're going to lower it further, particularly if there is a change in government. So again, this is where guidance comes in, and we're saying to people it might be worth looking at what your assets are. If you are looking to try and give, obviously, any of these over, to consider the implications of doing it now as opposed to in the future. I'm going to talk quickly as well, just one last example on this. Let's say you have assets over 270,000 and you've got 2 or more children. One of the other opportunities, and this is probably more relevant to all of the people listening today, anyone who has children, that you can save for their 3rd level education, for their deposit for a house, and you can do it very simply in a trust, which again sounds complicated. It's not. It's again just a tick box on an application form where you can gift your children up to 3,000 per parent, 6,000 if there are 2 parents, and then it falls outside of that 335,000 threshold. There is no benefit to you giving your children 20,000 as a lump sum in any given year at any stage. You should do it on a drip basis through a plan like this. It would make a lot more sense. And this is something that we talk to our clients about, particularly if you've got, children who are young, that you want to just save for, say, 3rd level. It makes a lot of sense to consider this in that environment.